So in Canada, we have what's known as a progressive tax system, which means that not only do you pay more tax if you make more money, you also pay a higher percentage of tax if you make more money. And this is divided into separate tax brackets, which is a term you've probably heard before. So perhaps in your own life, you may have encountered a friend, colleague, or coworker, random person on the internet saying that I was offered promotion at work, but I had to turn it down because it would have put me in a new tax bracket and I would have taken home less money than before. And I don't know if this is just an attempt at a humble brag to show how well they're doing, or if it's just a fundamental misunderstanding of how taxation works. It probably is a little bit of both. But really, this is completely incorrect. And in Canada, the more money you make will always result in you taking home more money. There's no situation where making more money somehow lessens your take-home pay. I think the confusion lies in this idea of the tax brackets, where people think that going into the next tax bracket means that new tax bracket rate applies to their entire income, when it doesn't. It only applies to the income earned in that tax bracket. Everything else from before that stays the same. I think this is best illustrated with a little exercise by looking up the tax rates and making a plot. So hopefully this will, set the record straight about what the tax brackets do. So I'm going to go to this website, taxtips.ca. I don't know if you've visited this site before. Our example, we'll use Ontario because I feel like that's the place with the most amount of people making the most amount of money who also have no idea what's going on. So we'll go with the Ontario tax rates here. Pull the tax brackets. And this tax tips. I hate this website, but unfortunately, it's all we got. It has all these stupid ads, and this formatting is all weird. It just it's complete garbage. However, they somehow have the up-to-date tax bracket information here. They also have a calculator. There's some good stuff on there, but it's awful to navigate. Anyway, so we'll go here into the Ontario tax rates. You can see that there's the 2024 ones already in here. We're looking only at the 2023. And it's probably best if we do this kind of in full screen. You can follow along with what I'm doing here. Okay, so we have the rates here, 2023, 2024. We'll just copy this whole table to a spreadsheet. Okay, 2024 ones we don't need. We can delete those. Add a row to the top for 0. Delete all this text here, so we just have the tax brackets. And for the high number here, we'll just put $300,000 income for the top of our graph. Now delete these tax rates, we don't need that, just keep the marginal ones. And now we're going to multiply the gross income by the tax rate for that bracket to show how much tax you pay. And now we'll take your gross income minus that amount of tax we just paid to find your net income. Now do the same thing for the next tax bracket here. Except to keep in mind that this is only between this $53,000 and the $49,000. So the difference between these two multiplied by the new marginal tax rate, $997. We have to include also that we paid tax on the first $49,231. So we're going to add that back to the $997 to get the total amount of tax you pay if you made $53,359. And now we can extend this all the way down for all the tax brackets, and same thing for the total net income. So now we can add a 0 to the top here for both of these values and generate a plot. So here you see the blue line is gross income, as if there was no taxes taken off. So you see it's a straight line from 0 to 300,000. Yellow line is your net income. And the red line is the amount of tax paid. So as you can see, the net income here, the slope was always positive, up and to the right, which means that the more money that you make, the more money that you take home at the end of the day. If that wasn't the case, you would see this yellow line dip down towards the x-axis, and we don't see that here. Here's our tax increasing as we increase in income. Now, what if we took an extreme amount and input a really high number? The max here is 300,000. What if we made it $2 million? $2 million in income, and see what that looks like on the graph here. As you can see, even here, as you make more money, you still earn more money at the end of the day. At around $1 million income, you start to pay more tax than you take home. So I also wanted to calculate the effective tax rate. So the amount of tax you paid divided by your gross income to see how much at the end of the day is going towards taxes. So in the first tax bracket, there's only one tax bracket there, so it's just going to be the same, 20.05%. But if we extend this down to for the whole list, we can see that, all these levels above here, we have, in the next tax bracket, your effective tax rate is now 20.37. Even at $102,000 income, your effective tax rate is 25%. So these numbers aren't really all that extreme. So hopefully that sheds some light on the difference between the marginal tax rate, which is the tax you pay on the next dollar that you earn, versus your effective tax rate, which takes into account all the tax you paid divided by your gross income. And especially in the lower income levels, the tax burden is 25% or less total. So that's not extreme in my opinion. And you have to remember that this is just a paper exercise, which doesn't even take into account a lot of the tax credits which are available to you, which will lower this tax even further. And so now maybe the next time you encounter someone who's complaining about tax brackets, you can drop this little bit of wisdom on them, or probably better yet, just avoid them altogether. They probably don't have the best financial opinions to give you. Probably the kind of person who recommends that you carry a balance in your credit card to improve your credit rating. Don't do that. We'll go over different tax credits and deductions you can make on your tax return to reduce this tax burden even further. So look for that in future videos.